How has the decline in business been for you, given that exposure to restaurants and the hospitality sector?
Yeah, thank you for having me. And by the way, just hearing John Taffer before, as an organization, we've collaborated with him for a long time. He's a good friend, and I share his optimism. By the way, I think right after a vaccine, people are going out to dinner. But yes, Shift4. So we process payments for about 200,000 businesses across the country, and in better times, 2019, that represents about 200 billion in payments. So not an insignificant portion of commerce, and a very large portion of that lives in restaurants and hotels. And to give you a sense, I mean, certainly in late March, the industry was entirely crushed, as was virtually all card-present commerce in the U.S. outside of, say, a supermarket. So payment levels dropped in those industries close to 80% from pre-COVID levels. Now, there's been a very, very steady recovery. I mean, almost started immediately in April, and mostly it's because people have to eat. Now, they weren't eating in the restaurants; they were doing takeout and delivery and curbside, and really hats off to small business operators for adapting to that form of commerce too. They did a great job. And that's continued to accelerate. Now, of late, for sure, November, type timeframes, you have cooler temperatures, warmer weather states are certainly faring better and maintaining some of those strong levels. Whereas, areas in urban areas and cities like New York City, for example, would have seen some sort of a decline as temperatures, certainly got lower. But in terms of broader recovery, I mean, Shift4 as an organization had year-over-year increases in payment volume, up close to 28% in October, which isn't obviously a representation of the broader hotel and restaurant industry as a whole. I think it's more representative of businesses adapting to contactless forms of payment, online ordering, things they weren't necessarily doing pre-COVID.
Yeah, Jared, it's interesting. You bring up that point that cash is physically just more dirty, right, than some of the contactless payments. So on the back of that, I'm wondering if the shift that we've seen, some of that was already underway. Have we just pulled forward demand that we were going to see anyways a year or two down the road?
Yeah, so I think that what we refer to as like the cash to credit conversion is something our industry has been following for a very long time. So you're totally correct. That was happening even before COVID. It's only accelerated now as people favor more contactless or even QR code-based transactions, which has become quite popular of late. I think Visa recently said that Visa debit transactions were up 20%. Now they certainly have areas that are down too, due to COVID, but I think that speaks to some of that cash to credit that is accelerating.
You have huge insight into the customer and the behavior of that customer. I think anecdotally here in New York, we're talking about shutting down indoor dining again, whereas Florida is open. Where do you see regionally pockets of that recovery starting to form within that restaurant business?
Yeah, it's a great question. And I do want to say, I mean, almost throughout all of spring and summer and early fall, it was virtually uniform across the country. There are some regional areas of interest, like, for example, there were parts of New Jersey and Connecticut that were actually up year over year in payment volume through the summer, even in the fall. And that was mostly attributed to commuter business, that wasn't happening in New York, where they probably would have spent, and instead was happening locally. So New York, for sure, and other major cities are still, quite depressed. Florida and warm weather states have held strong, even through now, even really, probably starting in mid-April. So even today, I would say, if you look down in Florida, Texas, there are certain areas that are almost on par with pre-COVID payment volumes.
We've had a conversation earlier about Bitcoin. Do you see Bitcoin as becoming an acceptable form of payment?
It's a great question. Look, I think it's a totally worthwhile investment for individuals. I don't know how mainstream it's going to get as a form of currency. It's interesting. If you're a pizza shop owner and you want to sell a pizza, you want to know that you're getting your $12 worth. And it's hard to know that when you're getting paid in a cryptocurrency. And if you're a really big crypto, consumer and you love the currency, the last thing you want to do is pay for a pizza that's $12 with something that you might think is worth like $1 million a year from now. So there's a lot of fundamental challenges with it becoming like a mainstream form of currency. It's more, I think, in the investment camp right now.
Let's get to the heart and soul of your business. You've recently acquired a company, 3D Cart, similar to the lines of Shopify. What does that acquisition do for your business?
Yeah, it's a very transformational acquisition. So as I mentioned before, we have 200,000 customers in the United States, and the bulk of them are restaurants, hotels, and specialty retailers. And we have very little exposure to e-commerce transactions. And that's not because our 200,000 customers aren't doing them. They almost all have some sort of a web presence, and that's just payment volume we're not able to capture. So acquiring 3D Card brings like an immense capability into the organization. It is a platform that is totally on par with some of the biggest names you would know in the space. And now we can make those capabilities available to our very large existing base of customers. So if you think we did 200 billion in payment volume before, what is that going to do when we're able to reach out and capture some of that e-commerce business? We also have 7,000 software partners that are out interacting with businesses all the time and don't have an e-commerce capability to bring them as part of a new offering. And then the third camp is 3D Card is like the ultimate underdog because its capabilities are very comparable to those big, 120 billion market cap behemoths. And we're able to be pretty disruptive with our resources in terms of like maybe foregoing SaaS costs and other things to really enhance the value proposition and start to whittle away share from some of the big giants out there.